A rally on our hands in the stock market the day after the Fed cut interest rates. How about that? Dow, 42,000. Doug Flynn joins us, Flynn Zito Capital Management. Usually Doug has a hat for these occasions, but I don't know, 42. He had the 40,000 hats. But listen, sometimes, isn't it interesting? Maybe you could explain this. It takes a day sometimes for the Fed. You know, you get the Fed and nobody's quite sure what to make of it, and now we have the stock market up.
Yes, sometimes it takes a bit to digest it. You would think it would have happened immediately to yesterday. It wasn't like it was after the market that we got the news. Right. So, and the market did kind of sell off as it digested it. Now they're saying, oh, this is good news. We're going to get behind equities. And, you know, I'll be honest with you. I think the equity valuations are a little concerning. This just adds to that just because they've gotten way ahead of themselves. And so, you know, earnings have to really, really ramp up. But maybe that's the expectation. That's what people are banking on to support this level. Yeah, you've been talking about some sort of rotation out and valuations being stretched, which we talked about yesterday. President Biden, our current president, was out today, you know, trying to play up his own economic record and got into the Fed as well. Let's listen to the president because it'll give you something to talk about. Here he is earlier today.
Fed lowering interest rates isn't a declaration of victory. It's a declaration of progress. It's a signal we've entered a new phase of our economy and our recovery. You know, I believe in the importance for the country to recognize this progress because if we don't, the progress we made will remain locked in the fear of negative mindset that dominated our economic outlook since the pandemic began.
From the Economic Club of Washington, the political word there is progress. That's the case he's trying to make, right? So.
It is. It sounds a little bit like a victory lap. And, you know, I always get concerned about that because it's like, it feels like, you know, it's someone who punches you in the face and then brings you a bag of ice and then they want to thank you for the bag of ice. It's like, that's the way this feels.
Is that not the way it's supposed to work, or?
No, not usually. You know, it's look, you're 20 to 50% inflation, depending on what you're looking at. And now, yay, you got it down to 3. Congratulations. And so, okay, we're glad you did that. We didn't get into a recession. That's all good. But let's not forget about, you know, what happened not that long ago. People are still feeling that.
You want me to be, if I would be balanced about all of this, there's the inflation under Biden. You're right. It peaked. Look at that, 9.1. Yeah. So those were tough times. And now, but again, getting under 3 is a big deal. We're definitely going in the right direction here. You and I got into it yesterday. The question's really jobs. The question, that's what the Fed's thinking about. If you can get,
that's what they've shifted to.
They could land this ship or plane or whatever analogy you want to use. I don't think it means landing a ship, but you land the plane, right?
Soft landing is slowing inflation and continued growth. It used to be slowing inflation and still good growth. So we'll take, you know, any kind of growth. But if they're able to do that, it would classify as a soft landing. And I think that's why, you know, that 50 basis point, half a point cut yesterday was a good one. The market sniffed that out actually more than the economists did, kind of knew that was going to happen. And now if you're on a 25 basis point or quarter point cut between now and June, there's 6 more meetings, and that puts you down about 1.5% more, or a total of about 2%. That could be the normal pace. And of course, they could speed it up, skip it, do whatever they're going to do. But that's, I think, where people are like, all right, the market's like certainty. We now have the certainty that rates are going in that direction, and that's what we can get
Here's one more chart before the bell if you want to be balanced. You were taking shots at Biden. Are you buying Trump media shares? So you see this? They closed at a new low. Oh, boy. There it is. Old Trump media and technology. So you go buy low. Maybe that's a buy for you, Doug.
The crazy part about that is that coming off of the high of like 70-something, you know, around 15 is somewhat of a point where, you know, the people that now are unlocked and the institutions that are able to sell it, they may not want to sell it around 14 or 15. And also, there might be buyers on the other side, the people that are strongly behind that. So I'm not saying that it makes any sense. The risk level of this is like 6 times the market, and it doesn't make any money.
They're all down at the New York Stock Exchange. They say, yes, let's buy Trump media. Doug Flynn told us to do it at the lows here. All right, thank you, Doug.